Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, November 26th, 2023. Hope you guys had a fantastic Thanksgiving, and let's get started. So, Friday was really a nothing day. The S&P closed up a little over 2 points, and really the one thing that I would say I see is typically the way that tops and bottoms work are tops are rounded and then bottoms are V's. And this kind of, you can see it shaping like a rounded top on it, and that's typically what takes place. So if this was the high where we closed the gap up at that 45.68 level, and we're just going to come down and do a 32% retracement, or what would be more likely would be a 50% retracement. And you see all these numbers here because these are this fib retracement lines. These are just regular support lines. So you can see right here the 4,400. This is 38% retracement. It's also support. I think there will be buyers waiting there. And then if we come down more, you can see the 50% retracement is right at the 43.38 level, and we have support at 43.47. So this will probably be the next support zone if the bears can get through the 38% retracement. So those are really my downside targets. As I said, intermediate term, I'm still bullish on this market. Short term, I'm very bearish for really the main reason is there's just been no break whatsoever on this run, and it's going to have to digest it at some point. And we've seen these moves happen every time for the same reason. Everybody thinks the Fed's is stepping out of the way, and they're going to start lowering rates. And as I said, they've made this mistake over and over again. I think they're going to be making it again. But just the short term, just really to wash out some people. And if we get down to the 4,400 level, we'll have made money on the trade. And we simply just step away and wait for support levels to buy. But I'm not ruling out, just because of all these gaps here, that we could have even a harder nail biter, just because we've pretty much gone straight up. And you could see that with the daily chart, where we have only had one really red candle, and that was a reversal intraday. But everything else has been pretty much, just straight up with it. So we're very overextended. I think the market's way ahead of itself with this, and we need something to shake out the overconfident bulls, like they always do. And you could see the moving average. This also adds for the 38% retracement. So the 4,400 level is going to be pretty hard for the bears to get through. If they do, then what will happen is a bounce out, and we want to see one of these levels used as resistance and then coming back down. But if we get down to this 4,400, I may just step aside on the trade and just wait to if we move lower, to look to start buying the dips. But right now, until we see at least a decent sized pullback that lasts a few days, 2, 3, 4, maybe 5 days, I'm not jumping. I would not touch this bull run for anything. It's a massive short squeeze, and I think the reasons why they're doing it is just for the wrong reasons. 4,400 looks like it could be a magnet to the downside. That's really what I'm looking for. Now, if we have to head higher, here you can see we have resistance at the 45.95, and then up at this at the 46.07. So I do believe that we're heading down. This possibly could have been the top on it. We'll have to wait and see how things play out tomorrow. But if they head higher, then again, we're looking at right around that the 45.87, 45.90 area as the next resistance. This gap was closed, so we're good to go with that. Now I'm just anticipating some of these downside gaps to get filled. So really the main area that the bears need to get through, this is my bull bear line, and that's at the 44.84. If we get through it, that's where we should come down to this 4,400 level in a pretty fast manner. And again, we just step aside, wait to start buying dips down there, or just take some off and let it run. But like I said, I'd rather be looking to buy the dips. But we're in for some kind of nail biter that's going to start. I don't know what's going to be the catalyst for it, but it's going to hit. We have bearish divergences on the hourly chart. We have bearish divergences on the 15-minute chart, and we're very overextended on the on the daily chart. So again, things are in the bears court. It's just a matter of, when are they going to make the move to push through. So the until they get it through this 44.84, the bulls are going to continue to try to, hang on to this rally right here. But if this gets taken out, that's when we're going to see a 70, 80 point, move that could be to the downside to shake everybody out. So let's just see what plays out tomorrow. It's like I said, we're just at a at a phase of this rally where it needs to take a break, and there is no Fed that's going to be propping this market up. So I don't believe that it's going to be anything like the previous rallies we've had and stuff like that when the Fed was involved. And as long as they're not involved, we're going to get these pullbacks that are going to be, we're going to get big moves in both directions. So let's see what plays out tomorrow. Enjoy the rest of your day, and I'll talk to you guys in the morning.